be prepared, guys. Get your cash, learn from your mistakes, watch out for the warning signs. And on this channel, I'm telling you, I've been telling you for months about the warning signs. And what I want to point out as well, 16 hours ago, my man James Reed commented, you called it a couple of months ago when I was 20% odd up. If I pull out now, I've made a marginal gain.
If only me auntie had bollocks, she'd be me uncle.
Also, I am still saying there is a huge market crash to come. There's too much propping up, too much uncertainty out there with the Ronnie Rome Vol, the stimulus checks, all of this propping everything up. It is going to collapse, guys. The foundation is not sturdy. I believe in swing trading right through this uncertainty is the best thing for traders right now because it is so dodgy. That was a video some 15 months ago, and even at that point of time, there was some stocks that I was buying at 70% discount, thinking that I was getting a good deal. This is what the channel is about. It's about spotting trends. It's about using charts to predict the future. It's not me. I don't have a crystal ball. It is all about charts. And what the charts are telling me now is buckle up. There is still the mother of all gapings to come. We are getting yet another bear market rally and people are getting very excited about it. I don't want to burst anybody's bubble, but you can choose to keep your head in the sand as people did back then, or enjoy whatever ride we're getting, but be careful with your money. Let's have a look. The setup will be more like 1929. Kathy Wood has warned of another Great Depression if the Fed doesn't pivot. On this channel for the last year, I've been saying what will come first will be a correction, then it will become a bear market, then it will become a recession, and then it will become a depression. We have done the first three, and I still think there's still room for a depression to come. So if you're interested in protecting your wealth, if you're interested in alternative views, because if you go on and watch the likes of Meet Kevin from a year ago or any financial education, go back, watch what they were doing October, January, February of a year ago. I can assure you it was buy the dip, buy crypto, buy my NFT tokens, and everyone got wrecked. Unfortunately, my little video at the time only got like 500 views. Boo-hoo. Can't get the YouTube algorithm to work, but don't disregard the video information. Charts don't lie, people do. What's the crack, everyone? Nice little rant there to start off the video. But listen, all seriousness, people are getting excited, including myself. I can't believe some of the rebounds that we've had. Some phenomenal gains. Let's have a look at one of the ones that I put into the group. A long hold of mine last month, up 132%. Aqua Metals Dream, unbelievable. Serious gains. Argo Blockchain a month ago was facing bankruptcy, facing shutting the lights off, closing the doors, goodbye. But since then, we've had some positive news, a bit of an average down, and hey presto, you're nearly out of the woods on it. It is phenomenal, the rally we've had. But will it continue? Well, it could continue. I cannot pretend that I know the future because no one knows the future. That's the God's truth. But what you do know is trends, where things look to be going, support and resistant levels. And again, this isn't just me coming up with this. This is what institutions, smart money as I call them, they use trading software of 10s, 20, 30, 40,000 pounds per piece of equipment. The reason they use all this is so they can identify trends. So then everybody's in sync. Everyone's looking at this going, this is where you take money. This is what you do. Or you can just dollar cost average. You can, just over the period of time, dollar cost averaging always works. And why I do agree that dollar cost averaging will make you very, very wealthy. I am not saying do not do it. What I am saying is you can do better. That is what I'm saying. Spot trends. If you're dollar cost averaging over the last year, one hell of a gaping. First thing I want to talk about is Bitcoin Dream. A lot of people getting excited about it. A lot of people seeing a huge rally thinking, oh, this must be it. We're going back to the moon. Well, let's have a look. From the lows to the highs, we have seen a lovely 30% rise, and on any given day, that is going to be very much welcomed. It is welcome. My Bitcoin HODL account that I massively regret hodling is seeing a nice little bounce. I have set a limit. Whether it goes through or not, we'll see. I've set it at 23,500. It goes through. I will be cashing out that position at a lovely 50% loss. So that's why my break evens are. I'm like, I can accept 50% loss. Why am I taking a 50% loss? I'm taking a 50% loss because this RSI is telling me we're massively overbought. This MACD is telling me that we're going into an area where volume is going to start dipping and we're going to cross over. This volume indication tells me that people are not that interested about buying at these levels anymore. And that to me says reversal. Could be wrong, I could be right. let's face facts, over the last year, a lot of these calls have been right, so I'm going to continue backing my judgment. Like when I did falling wedge, I said, when we break out, we're going to rally. We rallied. When I did this rising wedge, I said, when we break out, we're going to go to gape. Did a measured move. The measured move, it was this blue line. Very, very simple. You just measure from the lows to the highs. That brings you down to about this level, and voila, where are we? We're back at this level. Now, we could get support at this level. This could very well act as support and build on. I'm not saying that won't happen, but for me, looking at this and going, we've been able to get 30% out of where I believe could potentially be a bigger gape, and the bigger gape is in and around minimum 13 grand at this support level. That is where I have set my rebuy. That's where I want to rebuy. So that's the reason why I'm taking a 50% potential loss at 23.5, because if it does get around that 23.5 level, take off some money, rebuy that money at 13, 12 grand. So that's my thoughts on Bitcoin. Nat gas is another one that we've been covering on the channel. A lot of people made some great money on nat gas. Me personally, I held off waiting for confirmation. People jumped on and made some great money in the Discord. As you can see here with 30% gains. Some guys even doubled their money. Phenomenal. Set stop losses just in case. I was waiting for confirmation on this one because I just hadn't got there yet. And that's what happens. The confirmation didn't come and I just sold off. These guys jumped in and made some tidy money. And while that was a good trade for them, they jumped in on the buy symbol here and rode it up 8%. Times 10, 80%. You can see how these guys have been able to double their money on a leveraged trade. I didn't. I was waiting to get proper confirmation on the day chart was my indication. The day chart just never came and it looks to be going down. Now, while it looks to be going down, I can see that we are looking quite oversold. It is feeling like there is a reversal coming, but until I get confirmation, I'm not going there. Another question that came into the Discord yesterday was about the dollar. How is the dollar looking? Well, the dollar is looking like one hell of a game. Why is taking one hell of a game? And well, that's all to do with Fed policy. Now, if we actually draw out a horizontal line from this level, we can see previous highs. This is an area of support. So let's have a look at what this is on the day chart. Let's have a look exactly what's happening. Well, what's happening is we have fell below this. And while the RSI has been dancing along oversold area, we've continued to go on a downwards trend. We are looking to be crossing over on the MACD, which says there's more pain to come. Our volume is starting to decrease. There's no one really buying. This to me looks like there's more downside. Downside in the dollar generally means dollar goes down, stocks go up. And I've got a bit of news article on the dollar. US dollar suffers first death cross since 2020 as rally unravels. The US dollar has lost its first death cross in 2.5 years this week as a rally that peaked in September with the greenback as its highest level in more than 2 decades unwinds. So watch out for the death cross, never a good sign. There's loads of stocks that we could talk about, loads of stocks that we have won on. It's been a good week across the board. I've still yet to close out a losing trade. Very, very close to almost closing out my S&P trade, which I'm going to have a look at now. This is the SPY, SPX is the ticker symbol. What I have seen here this week has been very testing. I have had this level of resistance drew for a long time, going back as far as sort of March 22, so almost a year ago. We've went up every time and bounced our heads. This area that I've highlighted shows that we've had bear rallies, some great bear rallies. Look at this one, seen a 14% rise. Look at this one, we've seen 11, 12% rise. And this one, more recent, not as good, 5% rise. I'm on the side of probabilities, as I said at the start of this video. The SPX, I'm on the fence about. I don't know exactly what way it's going to go. It's telling me two things. It's telling me that we've got room on the MACD, we've got some room on the RSI. This level of support, we're cracking right on it. It could easily just sort of dance along this. It could kind of go sideways. Well, only time will really tell where this goes. An indication that it's maybe going to continue rising is that the dollar is telling me that it's going down. So I'm watching this one very, very carefully. Because it does have an impact, and it could be very well where I close out my first losing trade of the year. I'm not going to be foolish if we end up back in a bull market, which is the reality, guys. If the S&P goes above the 200-day moving average, finds support and pushes on, that's a bull market. We're back bullish. I'll trade the charts. I'm not listening to Jerome Powell anymore. Talk is nonsense. The NASDAQ is showing more bullish. It's showing that there's a good bit of room more to the upside, which kind of falls in line with where the tech stocks are. So there's another 3% potentially, at least on the NASDAQ for a rise. That could obviously affect the the NASDAQ types of stocks, and they will continue to push on. The UK 100, the FTSE, has blew my mind. It has shown superb resilience. We did this measure move on this following wedge. We can see that did play out. It fell down, and then we've built up support on this level on the 20-day moving average, and we have pushed on. We have seen it fly up 6% now, and that looks really strong. Only thing I will say is we are starting to get into a crossover on the MACD potentially coming up here. We're in that territory, and RSI looks to be overbought. So again, potentially pullback on the FTSE incoming. You should go in and watch my video from last week where we talked about the sort of trends that we're seeing in the market. We're talking about credit cards being maxed out, people that are struggling to pay their bills at the end of the month. This is all starting to bubble up. All the issues we've been covering sort of for the last 12 to 18 months, they're all still to play out, guys. You know, look at the 2008 financial crash. While I don't think this scenario is the exact same, look at the news articles that came out before the dot-com bubble. Look at the news articles that came out before 2008. Just look at those news articles. Take away all the scenarios. Just look at generally what the market was telling us. It was telling us layoffs, big companies pulling back, earnings starting to disappoint. These are the things that happen before big global recessions, depressions. Forget about what Biden's saying, oh, employment's never been so strong. While that is the case, and that is encouraging because it is a different dynamic, this whole scenario doesn't look favorably. When you look back at history, it just screams to me panic, fear, uncertainty. If you look at smart money, the retail were the people that were buying this week. Smart money was selling. What to expect in the markets this week. Monday is a bank holiday in the US, so the markets will be shortened this week, but we do have some more banks reporting, Morgan Stanley, Goldman Sachs, etc. P&G, which I'm interested in seeing, Netflix. These are going to be interesting because this gives us an idea of consumer spending. December retail sales, I'm taking out a pinch of salt. It'll probably be what the media is pushing out, that it'll be through the roof. It'll show, I think, a positive thing. I don't think it'll show that, you know, it's never been so high, but it's never been so high because inflation's never been this high in a long time. Updating the housing market, again, that lags. Housing market looks strong still, although it has pulled back. There is a shortage in demand, and that is keeping it propped up pretty well, in my opinion. And this here, sovereign debt default, if they were to do this, this would be the mother of all gaping. So there's huge builds, there's huge conversations happening in the background with government that could honestly send everything one way or the other. It's crazy. I personally think, you know, they'll throw more money at it. This will be fine, but it doesn't change the fact that this could easily just be like no, and that would send it all to Cape Town. We can see here, as is the date, Bitcoin's looking good, stocks are looking better, gold is starting to rise, and the commodities have come down, and the oil actually year on year is down, which is just mind blowing. If you actually look at some of the charts, that's there. That is encouraging. Oil factors into a lot of things. Oil generally, you know, price of oil and gas, just generally commodities, they have a massive impact on all output for businesses, textiles, everything. So if oil's down, generally that takes time for it to filter in, but in my opinion, that filters in eventually, and that is down year on year. So we're going to be in this high inflation recession in time, and we're going to look at a chart and go, year on year, oil's down. I didn't foresee the scenario. I mean, I knew it would come down undoubtedly. The charts told us that, but I didn't quite foresee year on year going into the middle of January, year on year, it being lower. So that is quite mind blowing. And again, that gives you an idea of how strong this market is. That's why I'm sticking to the charts, because it's 4D chess right now. I cannot understand with some of the news I'm hearing, some of the factors, you're just going, where is this going? Well, let's just focus on the charts. And if you want to learn how to focus on the charts, take away all the FUD, protect your money, understand where to put your money, links down below, get access to the Discord, start chatting with us all, earn money with us all, and better yet, learn how to do all of this on your own, and so you to stop making bad choices. This is all the earnings reports that are coming out. Earnings season continues. As it said, December retail sales is something to watch for. The PPI, that is going to be huge. As always, we'll be keeping an eye on all of this. I just want to get this earnings period over. That's how I see it. I think that the earnings could throw it one way or the other. There's some of the indices are sitting on a knife edge. It is very much all on a bit of a knife edge at the moment. It could very much go either way, but I've covered some TA, I've covered you sort of my thought process on where everything is sitting. That's the way I'm playing it. I'm done trying to navigate through what fundamentally could happen. I still think the Fed is going to pivot some stage this year. I still think things will get better, and I do think we will find a bottom this year, but being able to time that based on all this news is absolutely impossible. Stick to the charts, you will be fine. Please like, subscribe, help me grow the channel. If you appreciate these types of videos, it really helps sort of spread the word, get the YouTube algorithm going. I appreciate everyone that does support the channel. Thank you very, very much indeed. I will catch you in the next video. I have a great video coming out this week on Premier African Minerals. The stock is about to explode. Another stock that you should be investing in my opinion. Of course, not with real money, because we don't trade real money. I'm not a financial advisor, obviously, but that is a stock that is going to explode. There's no doubt about it. Some great news, great video coming out. Stay tuned for that. And if you're interested in more videos, I check out this one. This one I did about a year ago. This is what I believe needs to happen for a stock market bottom. It's worth watching. It's based on Apple. It's based on some statistics. Charts don't lie, guys. People do. Can't express that enough. I'll catch you in the next one.